Good morning, good afternoon, depending on where you are in the country, and welcome to Taylor Morrison's Home Buying webinar. It has been over a year since we've had one of these, and we know that there are plenty of you out there interested in new home construction and purchasing the home of your dreams, hopefully from Taylor Morrison. And I have a few gals with me today, and we're going to have some fun. We're going to talk to you a little bit about who Taylor Morrison is, a little bit about the home buying journey on the new home construction side, some of the constraints that we're facing today, but all of the opportunities and offerings that are available to you as you embark on your new home journey. So a little bit about me, Chris, if you want to advance the slide. My name is Stephanie McCarty. I've been with Taylor Morrison almost 7 years. I have the pleasure of leading our marketing and communications function, which is the best department hands down in the organization. And we have the pleasure of marketing all of our wonderful products in our communities across the country. I'm pleased to be here with you and Christy Farrow, who you will meet here soon. We're taking our social distancing here in the COVID world very seriously. I am here live from Scottsdale, Arizona, and Christy is in Maitland, Florida. You will hear from her soon. So if you want to advance the slide for me, Chris, who is Taylor Morrison? Why would you buy a home from Taylor Morrison? Several reasons. First, we are really proud to be recognized as America's most trusted home builder for 6 consecutive years. That is an anonymous, not paid for survey that is handled by a third party by shoppers and buyers across the country. And we take that recognition very seriously. We are a partner to you in this entire process. You can trust us. You can put that responsibility to purchase your home and for us to build your home with Taylor Morrison. We've been doing this for over a century, and we take our business very seriously. Through a combination of mergers and acquisitions over the last 6-7 years, we are now proud to be the 5th largest home builder in the nation, which allows us some advantages to that scale, to certain products, to labor, and we are proud to have reached that scale very quickly, actually. We build across 20 major US markets. We call it the SMILE, the Sunshine States. We're all around the Pacific Northwest, California, Arizona, Texas, the Southeast, which includes Georgia, the Carolinas, and Florida. So hopefully if you're in one of those markets, we've got your next dream home. We do serve every demographic. Not every home builder can say that. We have plenty of communities across the country that serve our first-time buyers, our move-up, our second-time move-up, and our active adult communities. We have a brand, Esplanade, that's 20+ communities strong and nationwide. So if you are 55+ and looking for your next active adult community, we've got several to choose from. And then some of the awards that we've won that we're really proud of that demonstrate the culture and the kind of organization that Taylor Morrison is. Just a few that I'll mention because there is a long list. We were several times on the world's most admired companies list by Fortune, and we are honored to be a member of the Bloomberg Gender Equality Index for at least 3 years running. We take diversity, equity, and inclusion very seriously at Taylor Morrison. So that encompasses our entire organization, and you'll see that and feel that through your buying process with Taylor Morrison as well. So Chris, if you want to advance the slide, we'll talk a little bit about benefits of owning a home. I know some of these are common sense. I know some of these are not going to be new to anyone. There's an emotional side and a financial side to what we believe are some of the benefits of owning a home, and not just a home, but a new construction home. That sense of stability, that pride, privacy and freedom, the ability to customize your space, all of that, that's where you're going to raise your family, where you're going to house all of your loved ones, and it's a long-term investment. So we know that when you're renting, while that might be ideal for a period of time in your life, we know that many strive for home ownership, and at Taylor Morrison, we want to make that accessible to many. I am not the financial guru, but you will speak to 2 of them here soon, but we know that interest rates are at an all-time low. We don't know for how long, so I'm not going to speak out of turn. I don't know if Christy's going to give us any gold nuggets there, but we do know that with the interest rates being as low as they are and rent increasing dramatically through COVID, we know that you can get into your dream home probably for less than what you would pay for your rent. So those are some of the financial and emotional investments. Let's talk specifically now to what are the new home construction benefits. Chris, if you want to change. Perfect. You're the very first home owner in this home. You get to customize this with all of your personal touches from your interiors and your exteriors. So what does that mean? You get to, it's a blank canvas. We actually have a program called Canvas, which I'll mention here in a minute. You are able to pick your kitchen design, whether it's the cabinets you want, the flooring you want, your backsplash. I mean, there really is endless opportunities to put the specific touch on your house that makes you happy. What we find a lot of people have in new home construction is the community. Everyone is moving in, everyone's new to the neighborhood. So there's this sense of community with the newness of everyone moving in that you often don't find in long tenured communities when, you know, there's turnover here and there, but you might have long-standing neighbors. So we do see a lot of camaraderie and get-togethers and gatherings when you are part of a new neighborhood. A lot of the homes that we build today are obviously built to a different code than homes that were built 5, 10, 15, 20 years ago. And they provide fewer health hazards. Our home, we're proud to share that we have a package called TM Live Well. So we have energy efficient, healthy options within your home. That's low VOC paint, clean water. We've got air filtration, whole home water filtration. All of those come included with your Taylor Morrison home. If you buy a new home construction, you're often to find new modern architecture, more open floor plans, different designs and layouts than some of our retail homes that have been built several years ago. This includes more energy efficient features, which I think in 2021, in the age of being woke, these are things that we all care about, not just us millennials, but certainly every generation. You know, we care about health and we want our home to provide a healthy space for us and all of our loved ones. So there's just a few of our new home benefits. We think that the list, we could go on and on, but we do want to talk today a little bit about some of the new home trends and how that feeds into benefits. So Chris, if you want to advance the slide, we'll talk about some of the interior design trends. If you fancy yourself a decorator, I don't. Interior design gives me a ton of anxiety. So we have both. We have solutions for both at Taylor Morrison, as do most builders. We have, if you want to pick it all, choose it all one by one, we have design studios across the country that allow you to do that and pick individually how you want your dream home to come together. If you're not, we have custom curated packages by our intelligent and super talented professional design team, where they can pick the best of the best and promise you that it would all come together. I don't know if you've ever like planned a wedding one by one and you kind of hope that it all comes together. That was me when I got married. That's how I would be if I was building a new home as well. So I would certainly rely on one of our Canvas packages. What you see on the screen today is one of our #1 selling curated collections. It's our Concerto. And you'll see these are the top selected items that we've really curated into kind of the perfect package for a lot of our home buyers. They're trending, the colors are trending warmer, sand tones, often paired with contrasting darker countertops or light countertops. So you really get that great contrast throughout the house. Dark, rich tones in cabinets or countertops paired with light walls and floors. And we're seeing very large tiling in the floors. We're getting away from your smaller cubes, going for either longer tiles or 24 by 48, which is, I think, one of the biggest tiles that we offer. So it's interesting to see over time, I've been with Taylor Morrison for 7 years, just how much the interior selections and the trends, how often those can change in that time. Let's talk a little bit about new home trends in colors. So we partner with Sherwin-Williams through our design studio to pick color collections each year. So this is our 2022 color collection. It features evergreen fog, a color that speaks to wellness and nature, and it's complemented by this warm wicker and dark night. This dark night I really love. I feel like that would be great, a great accent wall, whether it's in your kitchen or your bathroom or your bedroom, and then it's balanced with snowbound. I think some of the history behind this is It's more nature, it's more outdoorsy. I think people through COVID and this pandemic have been spending a lot of time outdoors. So it's how do you bring some of that richness and that feeling of being outdoors into your home. I think neutrals are certainly taking off, have been kind of an ongoing new home color trend for the last several years. And we're really proud of this color collection. And we've received a lot of really great feedback from consumers on this collection. So let's talk about one of the ways that you can purchase a new home construction. We are proud at Taylor Morrison to be leading the way in providing opportunities for consumers to engage with our brand in the way that they want to. This is near and dear to my heart. Our team has been focused on this for over 18 months. We know that as consumers and in this on-demand e-commerce environment, you want to buy things the way you want to, whether that's in the middle of the night from the comfort of your couch, or if it's in person with the sales team. You have both options with Taylor Morrison. We know that you could buy a car out of a vending machine today. That wasn't really a thing 10 years ago. People were very uncomfortable buying cars online, but now, if you're a car manufacturer and you don't offer that, you're at a severe disadvantage. I'd say construction, real estate, we're a little behind the times, a little archaic, if you will. But with COVID, it really accelerated our plans to bring new home construction along into the 21st century, allowing consumers to engage with us, find the information that they want to on homes. I'd say historically, new home construction websites have been sparse. You don't get all the details and the data and the pricing and what you would want to know to be able to make an educated decision on what's best for you and your family or your loved ones. So at Taylor Morrison, we take that very serious. Our website is chock full of information, the information you would want in order to make your new home purchase. And in the last 12 to 18 months, we've created several products that will enable you to be a little bit more empowered and own this journey. So on our website, you'll find several 3D tours of many of our floor plans. So if you want to see it, but you don't want to go into a sales office, whether that's just convenience, you don't have that luxury, or if it's a safety concern for you today, we do allow that for several of our models and our floor plans online. We do offer self-guided tours as well on some of our quick move-in or showcase homes. So if it's a completed home, in many of our communities across the country, you will have the opportunity to schedule a self-guided tour, which means that you get to go and view the home by yourself. We send you a code. It allows you access to the home, so you can go in without a sales associate. And then one of the things that is only available at Taylor Morrison today is we have online home reservations. So for instance, if you are doing a self-guided tour of that home that you love, and you want it, you can go online while you're in the home, or later that night when you get home and you talk it over with your loved one or your family, you can make that reservation online to reserve that home and take it off the market for 24 hours. Within that 24-hour period, you'll need to initiate getting pre-qualified for your home loan through TMHF, which is our partner in the mortgage space. And then schedule an appointment to talk through your purchase agreement with your community sales manager. If a ready home, a move-in ready home is not what you're looking for, you do want to customize it like we talked about earlier. We do have in several communities the ability to reserve a home and customize it online, whether that's picking your lot, picking your floor plan, choosing your exteriors, and then reserving that combination. And then today we don't have the whole canvas package online. We're working diligently for that to be an option for our consumers in the very near future. But you would just work with your sales associate to finalize your personalization inside. But we really are allowing consumers to do more of this online, which is kind of the way the world turns. So we're very proud of this and excited. And I do want to make a quick note before I continue and turn it over to Christy. I do see several questions coming into the chat. We are so excited to answer those for you. We probably will wait. We have some more information that we'd like to get through, and then we will go through your questions at the end. And I apologize for not mentioning that earlier. So it's kind of a choose your own adventure with Taylor Morrison. If you want to come in and tour a model and work with a sales associate, you are free to do that. If you want to make more of these decisions on your own time online, we have that option available for you as well. So I think I have one more slide. I just want to talk to you about the team of experts that will help you through this journey. And then Christy and I are going to walk you through kind of the ins and outs of what the process is with new home construction, because clearly it's a lot different than buying a retail home and a resale home and a home that is already ready for move-in. So who's going to help you with your new home construction purchase? You have several members of our team that will be there for you. Probably the first point of contact will be one of our IHCs, our internet home consultants. These are our online concierge team members. They're knowledgeable on all of the communities across the country. You can find their phone numbers on our website in each community page, and they will be happy to answer any questions you have, speak to you about availability, timeline. We know today with the supply chain and the labor issues, building homes is taking longer than it usually does, and we are having constraints with materials. But they are aware of most of that and can talk you through a lot of that. And so can your community sales manager. So an IHC can schedule an appointment for you with a CSM if you'd like. You can also schedule an appointment for yourself right online. And the CSMs are dedicated to communities. They know everything from all the ins and outs of that community, can help you make an educated decision too on your purchase. Like I mentioned, we have professional designers. Once you enter that purchase agreement, you're ready to go personalize the inside of your home. We have several that you can speak to about your options and what you're looking for. Loan consultants with the TMHF or Taylor Morrison Home Funding Organization. They're licensed, they're knowledgeable about everything, which you will come to see in just a few minutes. We have Aero consultants. This is our Able Ready Own program, which you're also going to learn about. This is an experienced team that helps customers on loan qualification improvement. We've had very successful purchasers and home buyers go through this program and come out on the other end with a beautiful home. And then our construction superintendents, which God bless them, are fighting the good fight every day to help us deliver our homes to our consumers and our home buyers. It's hard out there, but they are your #1 advocate to help make sure that you get your dream home when you want it, hopefully, and the way that you've designed it. So we focus on quality. They're very adept on building codes and requirements. They're skilled engineers, so they know what they're doing, and they will guide you through this every step of the way. So I'm going to take a breather. I am going to hand it over to my colleague and dear friend, Christy. Christy, you take it away.
Thank you, Stephanie, and welcome to all of our guests. I really appreciate you guys calling in today, and we look forward to hitting some of your questions. And between Stephanie, myself, and Deandra Avalos, my counterpart in our Aero department, hopefully we can touch on a lot and hit everything at the end. But just a little bit about myself. I've been with Taylor Morrison for nearly 20 years, and this is where I've called home the majority of my career. And I know this sounds a little crazy, but mortgage financing is definitely a passion of mine, and truly started when I joined Taylor Morrison nearly 20 years ago, because it really is about being centered on that part of the home buying journey with our customers, and then being able to work hand in hand with construction, design, and realize that, you know, with our focus solely on Taylor Morrison customers, we're speaking with one voice. We are an independent mortgage banker. We provide one-stop shopping. We tailor a mortgage to suit your needs and work hand in hand, like I said, with all of those other departments, trying to get parallel and get you to the finish line on your home closing when construction is complete. And we really do feel that finding the right financing option, it should be as important as your floor plan, your interior design selections that Stephanie just touched on, that quality of construction, and honestly, the love and care that every home buyer deserves during their home buying journey. So Chris, if you wouldn't mind advancing, just to kind of tell you guys why we're gathering here today, is to learn a lot about Taylor Morrison and kind of where we've gone these last 18 months, but also, you know, sometimes it's scary to get a mortgage. And, you know, when you see the stats that Stephanie showed earlier about the increase in rents, and if you're thinking that, hey, maybe I could actually afford to purchase a home, but I'm not really sure what's out there, down payment or affordability, that's what we kind of want to talk about today, is just scratching that surface of loan qualification. And perhaps some of these qualification guidelines that we touch on might be pointing you in the right direction to home ownership. It could spark some questions or give some clarity that you're in a good position to start looking for a home, or it's possible you realize you're not quite ready yet, but you can gain the confidence that you're not as far away from that new front door as you may have thought. But hopefully we can provide some useful tips and tools. I am excited for Deandra Avalos to speak about Arrow, our loan qualification improvement department, Able Ready Own. And then I'll introduce you to Dorothy, who is our mortgage technology platform. And again, feel free to jot down those questions. We are going to open up that chat and provide information on how to also contact us after the call if there's questions that maybe come up later you're just not comfortable asking today. So let's see, I'm on the East Coast, as Stephanie mentioned, so we're past coffee, but guys, grab your third cup of coffee or your afternoon tea, and we'll go ahead and get started and talk a little bit more about mortgage. Chris, you can advance. And, if anyone has ever done research about mortgage qualification, I know if you Google it, just the basics, you're going to come across usually these 4 C's. My preference is to compare loan qualification to the 4 legs of a chair. I think it's a good visual we can all relate to. So, the rhetorical question would be, would you knowingly sit in a chair with a broken leg? Probably not. But as a lender, we want to be sure that your loan has 4 strong legs, making that chair very sturdy. And this is kind of the analogy that I would consider as mortgage underwriting 101. So you want to have all these pieces very strong, because when you're lending hundreds of thousands of dollars, it is so important for the lender to understand the value of that property, of the loan that's being secured against. We have to understand your ability to save funds to purchase the home. How are you going to repay the loan? And whether or not you have the strength in your credit history to pay your debts timely. So we'll touch on each of these individually, give you a general understanding of mortgage qualification, and then hopefully help you discover that where you might be in that journey to home ownership. So let's get started, maybe just touching the surface of appraised value. So Chris, you can advance. Thank you. And that is your collateral. So when you secure the financing to purchase a home, a lender is going to require an appraisal report, which is going to provide that current value of the property. It is always completed by an unbiased third-party licensed appraiser. So there isn't any influence given by the lender or the home buyer, which in years past was the case. But the regulations are where they truly need to be. But the lenders have to be sure that they're lending appropriately to the value of the home and make sure the home is worth its purchase price. So God forbid there was any default on the mortgage, that home could be sold to cover those losses. But equally important, as a home buyer, you really want to be sure that you're protected, that you're not paying too much for the home. But the appraisers will conduct deep research of comparable sales data, and it's really about what is closed typically in the last 3 to 6 months. They do an on-site visit, they verify home size, features, and conditions, and use those comparables to find the most like the property that you're purchasing. That information gets compiled into a report, and it's your real-time selling price. So it's that moment in time when you're getting ready to close on that home to make sure that the value is there. So the second C that we're going to talk about is cash. So Chris, you can advance. Thank you. And cash needed for your down payment. Sometimes that's the hardest part to get to save up for your very first home. But you need your down payment and obviously any closing costs to complete that purchase. And when we talk about down payment, the loan you're applying for is always going to have a maximum loan to value threshold. And that loan to value, or we refer to as LTV, is the ratio that's used to determine the amount necessary to put in a down payment. And that maximum is determined by the sales price or the appraised value, whichever is less. So the minimum down payment could vary by loan product or occupancy type, whether you're purchasing a primary residence, a second or vacation home, or investment property. So for example, primary residence, we have up to 100% financing options available. And when you get into rental investment properties, you're typically looking at suggested 20% or 25% down for that. And your vacations homes are going to fall somewhere in between. And this example that's on the slide right here is just an example of a $300,000 purchase price that came in with an appraised value of $310,000. We are loaning, we're loaning against the actual sales price because that is less than the appraised value. But you have that nice peace of mind that when you do close and move into your home, you're already at $10,000 additional equity, and hopefully those appreciation values continue to grow. Chris, you can click for me. And, I just want to scratch the surface on the acceptable sources of down payment. Obviously, funds from checking, savings, money market account, just your standard liquid is certainly available, acceptable for down payment. But I will caution that if you have deposits that are moving into your bank account that are non-payroll, those will typically need to be sourced. And it could be transfers from another account that's easily sourceable, but we will source that just to make sure that they're not falling in that bottom bucket of the unacceptable sources of down payment. Investment retirement accounts, a lot of times will allow you to borrow or withdraw funds for a purchase of a primary residence and not take a penalty. Gift funds are completely acceptable, and we define that as money that's given from spouse, child, other dependent, or a person who's related by blood, marriage, adoption, legal guardianship, and you can also receive a gift from a fiance or domestic partner. We get a lot of questions about state and county down payment assistance. I will advise for purposes of this call that you always seek information from your local municipality. There are a lot of guidelines surrounding down payment assistance and availability. There may be income limit requirements and things of that nature. So I would redirect to where you live locally and you're looking to purchase. And then, a lot of times we have customers that might be looking at one of those inventory homes that are going to be completed or already complete to close, and then realize that, hey, maybe we do need to save up a little more money, or maybe that qualification improvement enhancement to my credit would be worth waiting for, and purchasing a to-be-built home would be okay. And, there are those times with Taylor Morrison homebuyers where they're saving money for closing from when they purchase to when the home is going to be complete. And just through a simple savings feasibility worksheet, we can, achieve loan approval that way. So that's definitely something that you would look into when you're doing your pre-qualification. And then last, the proceeds from sale of real estate. It could be a piece of land. It could be your current home that you're departing. And then certainly there's other personal items that, can be sold for down payment. It gets a little bit slippery when you don't have bills of sale and detailed documentation. But overall, there are lots of ways to gather that down payment. But what is not acceptable would be the cash you keep in your safe at home or your safety deposit box, or, we sometimes can refer to it as mattress money. Credit cards or cash advances from credit cards are not okay because those are technically considered unsecured funds or borrowed funds, and borrowed funds are not allowed when you're purchasing a piece of real estate or another investment. And Chris, we can advance. This is kind of interesting because this talks a little bit about, how can I get this down payment together and I have closing costs to pay, but there are what's called interested party contributions, and that is your seller, lender, and your real estate agent. All three of those are considered interested parties. So beyond the down payment, knowing that you have those settlement costs associated with buying a new home, it can get expensive or feel expensive and that you're just not quite there. And I will say that there is no rule of thumb to actually calculate the cost. They will vary depending on the market you purchase in. And these costs include lender fees, title fees, and then certain municipalities and locations, there will be government fees and transfer taxes. That's just the settlement fees alone for closing, but we know we have to have homeowners insurance on the home. We set up an escrow account so that real estate taxes and the homeowners insurance are part of your monthly payment. And if there is a homeowners association, which at Taylor Morrison, we do have HOAs within all of our communities, there are sometimes startup fees when you go to closing to transfer that homeowners association into your name. So those are associated with there as well. But when you have the interested parties in the purchase, and although we can't contribute towards your down payment, we certainly can help contribute towards the settlement costs. So you may have a real estate agent you're working with who may volunteer to contribute a portion of their commissions, or we as your lender may provide you a credit at closing. And then many times your seller will provide a contribution to financing costs as well. And I will tell you, Taylor Morrison is a phenomenal example of that. In all of our communities around the country, there's a contribution towards your financing costs as an incentive when you use Taylor Morrison Home Funding for your mortgage. And we actually couple with that and double down and provide a lender credit when you make loan application with us. So we're providing you a credit at closing as well, and piggybacking that with Taylor Morrison's incentive. There are maximum limitations on the percentage of your sales price that can be given, but we don't typically run into issues where we're exceeding that. So between the three interested parties, there is a little bit of relief on some of those costs. And Chris, if you want to advance to the next slide. Just touching on capacity. So let's just move on to our third C of our 4 chairs of our 4 legs of our chairs, excuse me. But capacity is really referring to how are you going to repay the mortgage? And we're looking for job stability and the likelihood of income continuing. So, you know, one thing I want to note, and a lot of people misunderstand, is your mortgage approval is based on your gross income. And that's going to be your income before any federal and state taxes are taken out, insurances, all that fun stuff. And we're not looking at that net take-home pay. So we'll talk a little bit about monthly income and debt and how to understand that max spend against your income. But when we talk about job stability, we're looking for a 2-year job history, typically the same line of work, not necessarily the same employer. There are exceptions to that. So I'll give an example. If you're a recent graduate entering your career and you can provide college transcripts and show you're working in the line of work for your degree, that would be acceptable to not have a 2-year employment history. If you've had a gap of employment due to a hardship, or you had to take time off for family reasons and now you're re-entering the workforce, that also could be considered for qualification. If you're self-employed or you're a contract worker who receives 1099 income, we will typically look for that 2-year history. And income from commissions, bonus, overtime, maybe you've had a second job, 2-year history. So that's just kind of a, you know, I keep repeating 2-year history, but that's really the rule of thumb. If you're retired, Social Security and pension is used. You may be receiving distributions from an investment account. That's perfectly acceptable. We just need to verify enough funds to show a 3-year continuance of that income. And then lastly, you may be receiving alimony or child support, and that is totally up to you if you want to utilize that as a source of income. We would just need to be asking for a divorce decree showing that, again, it's going to continue for at least 3 more years. But I'm going to pause here and I'm going to take a breath for a second because we've built 3 of our 4 chair legs and we're kind of sitting on a bar stool right now, which can get a little tipsy. But we've touched on collateral, capacity, cash. So I think, Steph, if you're okay, I'm going to flip back over to you for a minute since we're kind of on that down payment train, and maybe talk about some helpful ways if someone's considering using those proceeds from the sale of their home as down payment. I think Stephanie's on mute. Did I lose you, Steph?
I'm here. You talk about money. I'm not the money gal. You are.
We can go ahead, Chris, and flip slides if you want to.
Yeah, the one thing that we're actually seeing a ton of questions come in around contingency homes. So I think this is perfect. If any of you have heard of the iBuying space, it's very prevalent right now. I know there was a lot of noise in the market a few weeks ago with Zillow's exit of their iBuying business. Taylor Morrison is proud to have a relationship and a partnership with OfferPad, which does buy homes. The partnership with OfferPad is pretty exciting. OfferPad will allow, if you have a contingency and you would like to sell your home, but you're unsure of how that will work through the transaction and your transition into the new home, OfferPad will allow a consumer, allow one of Taylor Morrison's home buyers to select a flexible closing date that aligns with your new home move-in date up to 365 days out. So that's huge. So right now we said construction cycle times right now are a little elongated just due to the material shortages and labor shortages. If you sell your current home to OfferPad, you'll get a cash offer within 1 hour of submitting it because they'll know that you're a Taylor Morrison referral and you're purchasing a home through us. You'll have that price within an hour, so you'll know if that will work for you. You will be able to choose that closing date so you don't have any of the uncertainties of, oh my gosh, if I sell my home too fast, am I going to be homeless while I'm waiting for my new home, or am I going to have to bunk up with my in-laws? Nobody wants to do that. They'll also allow you to close your sale with Taylor Morrison and remain in your current home with an extended stay of up to 6 months. So there's lots of flexibility with our partnership through OfferPad. If you're working with a real estate agent, that's okay. OfferPad will pay out your realtor. So you're allowed to come to the table with a realtor that will not exclude you from this partnership. And some of the benefits of selling to an iBuyer are these kinds of solutions for sellers. You don't have to show, there's no showings, no repairs and inspection lists to worry about or to pay up front. They really eliminate a lot of the surprises that come with your traditional selling process. So we're really excited about that, and I hope that eliminates some of the questions that we've received around contingencies and what happens to me if I sell my home too fast. OfferPad is truly your answer here. So hopefully that helps, Christy.
Thanks, Steph. Thank you so much. With that, I think we are going to open up to that fourth leg of our chair to Miss Deandra Avalos, who heads up our Aero department, Able Ready Own. So Deandra, if you are there, you can give our audience just a little bit about yourself. And credit does seem to be one of the hottest topics in mortgage. So Dee, thank you so much for being here today.
Thank you, Christy. My name is Deandra, and I've been in the mortgage industry for about 21 years. I was fortunate enough to find my home with Taylor Morrison about 14 years ago. I was super excited when they presented me with an opportunity to start or be a part of our Aero department, the Able, Ready, and Own, where I get to work with clients that would like to improve their credit scores for qualification or to receive an interest rate that's more favorable within the market. Credit itself is unique. It's like a thumbprint. So with that being said, everybody's going to be a little bit different. The age at which you open your accounts, that all plays a role, and of course affects your credit quality. When we're looking at the credit scores for a mortgage, it's going to be generated with a tri-merge report. So we're going to be pulling from Equifax, TransUnion, and Experian. Many times people think that you need to have a 700 plus credit score to qualify, but it isn't necessarily true. There's a variety of loan programs out there that'll allow a minimum credit score anywhere from 580 to 600, all the way up to 700 plus. Now, the credit scores are going to have an impact on your qualification and your interest rate. It could also affect your mortgage insurance premiums. So we're going to talk a bit more about credit and ways that you can enhance your score to obtain the best possible financing. Chris, can you go ahead? Thank you. So some of the primary score factors that are used to calculate your credit scores are going to be shown on this slide. Let's see. So it's showing that 65%, it's actually 35% of your payments made on time is going to impact the credit scores. The next thing would be the amount of utilization. So they're going to look at how much credit you have available versus how much that you're using. They want to make sure that you're being responsible with the amount that is available to you and that you aren't exceeding those limits or you're maxed out. You want to show that you're in a position to be able to afford the new home of your dreams. Now, most creditors are going to look at your overall credit profile, which is why we have them. You want to make sure that your scores are high enough for qualifying, and they're looking at that payment history without a late payment within the last 12 to 24 months. But we are here to assist you and show that you are a good credit risk. I know that as a personal example, when we were helping one of the family members who had been trying to enhance their credit to get in a good place to purchase a home, they were looking at the total credit card balances to pay down rather than the individual credit cards themselves. So he paid off a lot of the smaller balances, but left the higher ones over 80% of the credit utilization, thinking that that was going to help improve his scores. But again, credit is unique to the individual. So what might work for one person may not work for you, which is where our department comes in. We're able to help assist you and guide you to show which accounts you should be focused on, whether it's paying down balances, potentially opening up new credit when the revolving credit isn't there. Those are all kind of a few of the things that we'll look at and kind of recommend in a personalized path that is set out for you directly. Okay, the next slide, please, Chris. Now, when we're looking at credit basics, you have your soft credit pull, which is going to be something that would be when you're looking at your own credit scores. It's not anything that goes out to the bureaus. It's just kind of for your personal reference. And then you have the hard inquiry. Now, there's a lot of myths in regards to credit between the soft pull and the hard pull. A hard inquiry would happen when you're applying for credit for credit cards, auto, student loans, mortgage, utilities, rent. Those are going to remain on your credit report for up to 2 years and can cause incremental decreases in your overall score. Again, it's just going to kind of depend on what your overall credit profile looks like. When you're shopping for mortgages and auto loans, you'll see like incremental dings with those inquiries, but there is a time frame to go ahead and allow you to shop for your car loan or your mortgage, which is like a 14 to 45 day window from the initial inquiry. We start off with the soft pull, which provides us with 2 of the 3 scores. Once you make the decision to purchase the home, then we'll go ahead and move forward with the tri-merge and the formal loan application. Go ahead and move to the next one. Thank you. So you may see that when you're looking at your own personal credit versus what we're looking at, you have your residential mortgage, which is going to show all 3 bureaus, Equifax, TransUnion, and Experian. We'll use the middle score. It's not an average or a median. It's literally if you had like a 700, 710, and 715, that 710 would be the middle score that we use. When you pull your own, or if you use a credit monitoring service like Credit Karma, or even subscribe to TransUnion or Experian directly, you're going to see your consumer score. It says FICO, but they use a different scoring model. It's more for an educational kind of to give you a roundabout idea of where you're at. Then you're going to see like the revolving credit, the credit cards. With that, we want to make sure that we're looking at not closing accounts, as it could hurt your score, with losing a positive trade line that's been working in your benefit. You want to make sure that you leave those accounts open in good standing. A lot of people think that it looks better, or it would help you if you had accounts that were paid off and closed, when really it's kind of like shooting yourself in the foot. We also go with keeping your balances and your utilization typically beneath 50%. Then it would be 30, 19. It just kind of depends on what it is that we're trying to achieve. We discuss with you how to pay your payments so that when the balances get reported to the bureaus, it's showing that your utilization is much lower. And then we look at you with, work with you on that derogatory credit to make sure that you stay on track. We stay in touch with you monthly to kind of make sure that all payments are made on time, that any of the questions or concerns that you have during the process are kind of answered. The next slide, please, Chris. Then we go into collection accounts. A lot of people think that paying a collection account can help you. It offers no immediate improvement to your credit score unless it is a charged off account with like a debt that is being held by the original creditor. So we help to kind of target which accounts you would benefit from on paying. We look at the medical collections that are on your credit report, which they don't typically have to be paid as part of your approval process, but it does have a negative impact. And we discuss how you might be able to work on getting those items removed from the credit report. Public records, right now, they show up on our credit report when we pull them, but they're no longer factored into your credit scores. It's something that used to occur, but it doesn't anymore. It can impact your approval or your qualification, which is why we do help assist with that as well. We look at what you're able to afford in regards to the credit. We have the information in regards to your income, your assets, what you have to do with your down payment, and we work with you to make sure that when you may be able to qualify, but we want to make sure that we're not putting you in a position where you're overreaching and that we're setting you up on good terms. Next slide, please. So in our Aero department, as I said, our team will go ahead and review your credit report. We look to see where you can improve the credit scores. We come up with a personalized path specifically for you that is going to help you not only improve your scores for qualification, but for a better interest rate. It's a complimentary service. It's free of charge. We are able to help you whether you've written a contract or something that you're looking to do in the future. It will help you improve your credit scores not only to qualify. It helps with your debt to income ratios in regards to what accounts you could pay off to help strengthen your overall credit profile. We look at helping you build trade lines so that when you are able to go and get your loan approval, the next step would be that you get the interest rate that you have worked so hard for, to go ahead and make sure that you're happy when you reach your new front door. And I believe that that is all that I have. Chris, go ahead and the next slide. Yeah, so we'll do the credit simulations. We'll help you with your personalized path. We reach out to you within 24 hours and then kind of work with you along the whole process just to kind of make sure that everything is ready for you. We assist with reducing credit card balances, removing incorrect information. We will do a rapid rescore when needed, which forces the bureaus to update balances or to remove negative information that may have been done in error. We work hand in hand with your loan consultant as we are part of the finance department, and in turn, we work with sales to make sure that everything is good for you when you are ready to close. Next slide, please, Chris. And at this point, I will go ahead and pass the baton back to Christy. Thank you.
Thanks, Deandra.
You're welcome.
I'm so glad we have Deandra and her team. And what I just want to kind of throw out there is Deandra and our other Aero consultants work with us nationwide with all of our home buyers, whether it is that qualification improvement need or its enhancement for that better mortgage insurance premium or interest rate. But that is all they do all day. There's no other distraction, and they've seen it all since 2011. And I just can't say enough, Deandra, for what your team does. So thank you so much. You guys, really quick, I know that we're getting 9 minutes from the top of the hour. And I just kind of want to throw out there, I had a chance to kind of read through some of the questions. I'm sure Stephanie's been looking at them as well. First and foremost, I want to make sure everybody knows that we will be sending out this recording to all of our registrants later, and Stephanie will touch on that. We will give you guys some information if you have specific market questions, again, that we won't be able to answer necessarily on this call. We will direct you to that specific market. But there were some great general questions that we want to get to. So we may run over a few minutes. I can't imagine more than 5 or 10 minutes, but we are going to do our absolute best. And maybe over the next 9 minutes we have on the hour, we'll grab some of those that are in the chat right now. But really quick, what mortgage is going to suit your needs? And we've covered all the loan qualification, the tips on the credit score enhancements, but let's just take a minute to talk about the most common loan products. I did see some questions in the chat about, do I really have to have 5% down or 20% down? No, you don't. First, let's just mention a conventional loan, which is our non-government loan. Fannie Mae, Freddie Mac are the two major agencies that purchase these loans. And there is that classic down payment of 20%. However, you can do as little as 5% down, which will have that mortgage insurance premium, which is a premium on your loan that protects the lender in case of default. Obviously, the least down payment poses the most risk to the lender on default. But there are also conventional loans specific to first-time home buyers that only require 3% down. So unless you're looking at one of the first-time home buyer options, the conventional loan is usually the best fit for customers purchasing in those more higher price communities. But then from the government-backed loans, you've got USDA, VA, and FHA. And USDA loans are only available in select rural areas around the country, and they are great for customers with little or no down payment. There are median income limits, which means that a family of X amount can only make up to a certain amount if they're purchasing in one of those areas. And there is a more strict debt to income ratio requirement than a VA or an FHA loan. We do have a few pockets around the nation where Taylor Morrison builds that is eligible for USDA. But like I mentioned, it typically is in those rural areas, and we aren't usually building in those markets. But a VA loan for our veterans is such a great product for active duty or veteran military service members, and also little or no down payment required. There is much better flexibility with higher debt to income ratios and lower minimum credit scores when you compare that to a conventional loan. And then FHA are loans secured by the Federal Housing Administration, which has little as 3.5% down payment. And there is a common myth that an FHA loan is only for first-time home buyers, but that is absolutely not true. But there are some loan amount restrictions based on the county loan limits. But I have to tell you, there was just an increase on most of our counties in 2021. So still very affordable and able to get into an FHA loan in the majority of our markets. And it's a great alternative if you're not able to qualify for USDA because either the home's not in a rural area or you're exceeding those income limits. So FHA is a great opportunity for many, many home buyers. And when you talk about, Chris, if you want to advance the slide, when we talk about, how much can you afford? Debt to income ratio, I've said it a couple times, and it is a most critical piece of your loan approval because it's really telling us how much can you afford every month. We talked about gross income versus net income, and the calculation that we use compares how much you owe monthly against how much you're earning on that gross income. So when we look at that pre-tax income, we need to be certain that after you pay your mortgage and your credit obligations, that you have that money left over for other expenses. So you have to pay the government, your federal and state income taxes. You need basic needs such as food and clothing, childcare, utilities, cell phones. But a solid rule of thumb is, to not have your housing plus your credit expense be above 40% of your gross income, which is going to leave plenty of money left over for all of those other obligations that I just mentioned. However, there are loan programs that allow for higher than 50% of your gross income to be considered. FHA and VA kind of sit in that bucket. But you typically do want to have good compensating factors such as a good credit history and have some of those cash reserves in the bank. And to calculate your own debt to income ratio, I've got a nice little formula. I just say divide the little number into the big number. But you would take your housing payment. Well, we hope it's a little number into the big number, but your housing payment is going to include that principal and interest payment on the new loan, monthly homeowners insurance, monthly real estate taxes. If you do have mortgage insurance, that's considered. And then, of course, any monthly homeowners association dues. And when you add those to the minimum payment on your credit, such as car payments, student loans, everything that Deandra just talked about, and you do that calculation, I give an example up here that you can take a look at. And again, this presentation will go out as well. But that is just a really easy calculation to see, hey, do I even fit in that bucket? But again, don't discount. If you try to do your own math, we're always here to kind of help walk you through that as well. And Chris, if you want to advance, just kind of want to touch on Dorothy. We love her. I know we're at information overload right now, so I'm done with my mortgage spiels and education for the day, and it's a lot to take in. But we do want to just kind of lead you guys down the next path if you're ready to take that first step. We at Taylor Morrison certainly understand that purchasing a home is not something that happens often in someone's lifetime. Sometimes it's once. As Stephanie mentioned earlier, it is both a financial and emotional commitment. And quite honestly, will probably be the largest purchase you ever make. So for us to be available for you and guide you every step of the way is important. And we want to do it with technology that meets today's needs and customer needs, but also not lose that personal touch. So Dorothy is that state-of-the-art, very secure mortgage technology, and it works alongside our Taylor Morrison Home Funding team that brings you the combination of both of those things as the best, what we believe is the best home financing experience. We've used industry standard encryption technology. You can trust Dorothy anytime, anywhere, account access, secure document transfer, and real-time loan information. And, there is cybersecurity is so big right now and so important. And unfortunately, too often, we still have a lot of customers that just want to send their PDF bank statements over to us in an email because they don't want to work in a portal. And I could not encourage against that more. And we have the platform that gives you that sense of security. So if you want to advance, Chris, again, whether you're ready to pre-apply or you just want to talk to Deandra's team and see, hey, what can I do to get started? I think I need Arrow counseling, or I'd just like to see where I sit, but I haven't really started looking at a Taylor Morrison home. We are absolutely here to help you anytime. Our website is up here at the top, taylormorrison.com/homes-financing, and you can go right in there and pre-apply. And Deandra did mention earlier, we do a soft credit pull, so you don't have to worry that we're going to have an inquiry on your credit. And, once you submit that request, there's you'll be prompted through some very customer-friendly finance questions. But when you hit submit, you will be directed based on the market area and community that you chose. You will be directed to a group of local loan consultants. We want to make sure that we are there to service you as quickly as possible. We do not have one loan officer assigned to one particular community. We have a team in Austin. We have a team in Phoenix. And somebody will reach out to you very quickly, usually the same day, unless, of course, it's very late in the business hours. You would hear back from somebody in the morning. And then again, if you were working with Arrow, that would require a hard inquiry for us to run that simulation and get you on the right path. But if you just, again, if you just have general questions and you want to talk to someone, you can use this. If you go to the Talk to Us tab on our website, you would email that local loan consultant group in the market you're seeking, and all of our loan officers on that team will receive the email, and you should hear from somebody within just a few business hours. So with that being said, I'm gonna kick this back over to Stephanie in just a second to wrap us up. And Chris, you can go ahead and advance. But we do get a lot of questions just to get that visual on the home buying journey. So first of all, thank you guys so much for giving us this time today. But let's just go ahead, Chris, and advance one more slide to the home buying journey. And knowing that pre-qualification is that first piece to home ownership. I just wanted to kind of get us going on this. But of course, let me just mention, if you are paying cash for your purchase and you do not need financing, which I will tell you nationwide averages about 18% of our home buyers, you do not need to pre-qualify with Taylor Morrison Home Funding. You would simply work with your community sales manager before you go to sign your purchase agreement. They would ask you for proof of funds, whether that's through investment accounts or bank statements. But if you do need financing, Taylor Morrison does ask that you pre-qualify with TMHF. Again, we're not doing that hard credit pull. I saw a lot of questions in the chat, which I'm just going to address rather quickly of, can you use your own lender? Do you have to work with Taylor Morrison's lender? You absolutely can use your own lender. That is, a lender is your choice. It is not a force. There are obviously incentives to using Taylor Morrison Home Funding, and we talked about those, the one-stop shop, knowing, there's so many departments and so many team members that are working with you to get you to the end of the line. And when you consider the breadth that Taylor Morrison has nationwide, it is super important that we're able to get you to your closing on time and smooth for all parties involved. And so Taylor Morrison generously provides you that incentive towards closing costs, as well as we provide that lender credit. But if there's situations where you have a lender you prefer to work with, that is absolutely okay. We would just ask that you pre-qualify before purchase. Taylor Morrison is getting ready to build a $300 to $1 million plus home, all on good faith. And by having the relationship with a lender to kind of understand what happens in that approval process, to know that you will make it across the finish line is really important. So we do require pre-qualification with us before you sign. And then once you go to contract and you work with your community sales manager, if you'd opt out of applying with Taylor Morrison Home Funding formally, that's perfectly fine as well. You would just want to let them know. At that point, you would also be providing Taylor Morrison your earnest money deposit. When we talk about earnest money deposit, it will absolutely vary by market. We get a lot of questions about that as well. So we would redirect you back to your local community that you're looking in to see what those requirements are. And the earnest money is going to be basically credited to you when you go to closing and applied towards that down payment or towards the purchase price, for example, if you're paying cash. So once you sign your purchase agreement and you provide the earnest money deposit, be prepared if you're getting financing that you will need to provide the source of those funds. I did see a question in the chat on why would cash on hand not be allowed, and it goes back to what are acceptable sources of down payment. So we do need to make sure, and it goes back to money laundering and Patriot Acts and all kinds of stuff that are regulated and the government has in play to make sure that the money you're using to purchase a home truly belongs to you or fits within those buckets that we talked about earlier. Once you complete your loan application is when we get a formal approval. We do it in the very beginning, again, so we can really put that green stamp and say, okay, Taylor Morrison and Mr. and Mrs. Johnson, you're ready to go. Let's get this home started. But your documents that you provide to us and your credit is good typically for 120 days. And if the construction on your home is going to take longer than that, then we will ask to update that as you get closer to closing. We'll look to lock your interest rate when you're within 60 days of your construction completion. And we do offer extended rate locks as well. So those are all questions as you're moving through the journey that you can talk directly with the loan consultant about, or feel free to reach out and ask a general question. But Stephanie, if you're okay, I'm going to turn it back over to you to take us from that signed purchase agreement and loan application through the rest of the construction process.
You bet. Thanks, Christy. So as you can see, I don't want to walk you through every step. There's 14 steps. There's probably even more. We've really broken this down into some of the key components. But we will assist you. The main point of this slide is you will have someone hand-holding you through this process. There are a lot of opportunities while the home is under construction to be a part of that. It's an exciting time. People love to come and visit their home and watch it construct and come to life. Before you close on your home, we will do a new home demonstration. This is one of my most favorite parts of the home buying process, where your superintendent and your CSM will walk you through your new home, talk to you all about it. If there's anything that doesn't meet your specifications, we'll talk about kind of that punch list on what's left to make it perfect. And then you'll move into your home. And then after that, we'll reach out to you several times to make sure that you're satisfied. And if anything doesn't meet your needs, we can come in and have our warranty team come in there and get everything to your satisfaction. I know we are 7 minutes over and there are 100+ questions in the chat. There are some general themes I want to hit on that I think could be helpful. If you did pose a question that's very specific to a certain community or a certain market, unfortunately, we won't have time to answer those today, but we will have an email address that we will show at the end of this presentation that we would welcome you and invite you to send those questions to, so we can get those answered for you. There's several questions around just current market conditions. I've seen some folks bring up this, what we call internally a HOBO. It's a highest and best offer. It's some of you are referring it to a bidding war. It's not fun. It's not ideal. We certainly don't enjoy doing them. It is more akin to the resale environment, though. When a private individual puts their home on the market, they're certainly going to take the highest offer that they get for their home. So we're kind of mimicking really a traditional selling environment. I know that doesn't feel good, but the current market conditions are kind of forcing some of that activity. We hope that that's not going to be around forever and that things are going to normalize and our typical new home construction sales process will kick in. Some of you have mentioned a limited lot release. We are in some specific markets and some specific communities limiting how many homes we can sell a month. And this is really to protect not only our buyers, but to protect us. If we sell too many homes and we're unsure when we'll be able to start and finish those homes, that just leads to a terrible experience for all parties. So in several markets where we know we're having a tough time, we're limiting how many we can release, only to, like I said, protect all parties. Material shortages is, my gosh, is the name of the game. It is the theme right now. Our purchasing team, God bless them, they are doing everything they can to make sure that when your sales order comes in and your selections in the design center or through Canvas, that we have those. In some very rare instances, in order to keep construction moving, your sales team might contact you with a substitute, whether it's a cabinet or something that's on back order and we can't get. They will call you and say, hey, this is going to delay your construction by X weeks. We can continue moving on your home if you're okay with this substitute to a specific item. Now, that is not widely across the country. We're not facing that, but in some markets we certainly are, and we're trying to work as hard as we can to get your specific selections in a timely manner. But like other trades and industries, we're fighting the same fight on that, those material shortages. There were several questions around timeline. How long does it take once you've selected everything and you've signed your purchase agreement for your home to be finished? And like I mentioned, that is going to vary market by market, and in some cases community by community. I'd say we're seeing anywhere between 5 and 12 months right now. And I know that that is a huge leap So it's really going to come down to the market you're trying to build in and the complications or specifications of your personal home choices. A few quick things on OfferPad, and then Christy, I'll kick it back over to you if there's something you want to answer. A couple of you asked if there's a cap on price of home OfferPad will buy. There certainly is. They have what that industry or organization calls a buy box. If the price of your home falls without, not within that buy box, they won't be able to make an offer for your home. That buy box is different by market. It's very localized, which it has to be. So it's a good part of their business strategy. And they are limited in markets. They're not everywhere. So if someone is wanting to move from New York, and we are so thrilled and we want to help you build your dream home. If OfferPad is not a solution for you, there's also Opendoor is their largest competitor. So I would check the Opendoor website and see if they are available within the market. And see what their buy box allows. We also have a partnership with Opendoor. I don't have the specifications on hand of, how long they'll allow you to stay in the home. It might be more limited than what OfferPad offers, but I think it's worth investigating. Christy, is there any other questions you want to hit on before we wrap? I know we're almost at.
Let me just skim these really quick because I'm going to find the ones that would have some pretty quick answers. Bear with me 1 second. We did have a question about when would you find out interest rate. I think I touched on that. You will get a full loan estimate when you apply for a mortgage. We will have a floating interest rate for you. Like I said, you can lock up to 360 days prior to closing or as short as 15 days prior to closing. There was a question, just bear with me. There were so many good ones, but again, if it's market specific, I would definitely refer you back to there. Can you expect an appraisal gap on new construction when it's done by a third party? And, that's such a great question. We order, whether it's new home construction or resale purchase, appraisers they are third party, they are unbiased. Lenders will have what they call a panel of appraisers and an appraisal management company. It is completely third party, but most appraisers are very familiar with new construction just as resales, and they do their research and they do their due diligence, typically through the MLS. And they are regulated just like the rest of us. So there really isn't a gap. We order appraisals 60 days prior to closing. We do wait until you're getting closer to that completion date before we order that appraisal. So we don't see those gaps. And then let me just double check, Stephanie. Can you request and start an application now? Absolutely. Steph, how many years is our home warranty? That was a question I just saw.
That is a really great question, and I think it is dependent on market as well.
Okay, perfect. Prepaid items, we had a question on what are prepaid items. Those are not your actual hard closing costs. That is your first year of homeowners insurance and setting up your escrow account and paying the per diem interest for the month that you closed. Again, that is all disclosed to you when you pre-apply and formally apply for your loan. And Steph, I think honestly, I think we're good. But again, there's so many good detailed questions. If we want to go ahead, Chris, and advance the slide. Stephanie, I think, in the past when we've done our webinars, the communications at taylormorrison.com is such a great place to send questions because we are able, if you're not going directly to that community sales manager, we will distribute those as we get them to the right individuals. Would you agree?
I would, yes. It's hard to answer all of them here and take up that much time, but if you can send an email with your specific questions, we can certainly sparse those out across the organization and make sure we get you in the right hands.
So Steph, that is all I have. I'm going to let you close us out as the host with the most.
Oh, please. Thank you. There are several hundred of you that have joined us today. We're so appreciative of your time and your interest in Taylor Morrison. We are here to serve. We build beautiful homes. Our experience is top notch, and we would love to welcome you to the TM family. So please send your questions to communications@taylormorrison.com if we can further assist you. And we look forward to working with you. Enjoy the rest of your Wednesday. Take care.
Thank you.